Tesla stock has Wall Street absolutely losing their minds. That stock was up another 6.5 percentage points here today. They cannot stop buying Tesla stock right now. We're up another $25,000 on Tesla stock here today. That's after yesterday we were up like $30,000 plus. The day before we were up a ton on Tesla. It's incredible. They are bidding this stock up left and right now. Okay, so I want to go ahead and react to a couple Tesla videos right off the top here. Tesla deliveries are being overanalyzed by investors. Looking forward to reacting to that one. And then, what in the world is Dan Ives wearing here? Holy smoke, says no jokers. We're going to react to this one. Why Dan Ives says Tesla's undervalued. That should be interesting. Then we're getting to Jim Liebenthal expecting a September Fed cut, and I'll kind of share my opinions and perspectives on that one. And then the Fed minutes came out. We'll react to this little 1 minute clip there on the Fed minutes. And then last up here, a completely random subject, Manhattan real estate showing signs of becoming a buyer's market. You know, you've been hearing a lot of stuff like this, headlines like this, luxury real estate prices just hit an all-time record. I'm going to destroy that, okay? And we'll see that in this video, okay? Appreciate y'all joining me as always. Thanks so much for being here. Thank you for smashing that thumbs up, and thank you for being subscribed to the channel. I appreciate each and every one of you. This is the last chance to get on the wait list for the 4th of July sale for 1000xstocks.com. So if you want to get on that wait list, do it right now. Pinned comment down there. This is your last chance. This is the last video I will be promoting that wait list in, okay? Let's get into this.
We are right now, and you recently reduced your price target just a couple weeks back based on lowered robotaxi assumptions. How much of the 227 at this point is robotaxi? I guess you're not expecting much out of the 8.8 event.
Well, it's about 52% of my valuation is robotaxi. Dropped it from about 70%. I mean, look, the stock has run up quite a bit past week or so. I mean, this tends to happen with the stock. I doubt a lot of the investors
227
who are pushing the stock up are doing all the rigorous math that I've done. So maybe it's run a little much. I think the delivery number is something that folks are maybe over analyzing. This is really an autonomy play. August 8th, I think it's important kind of from a conceptual point of view. You're going to get people like me write these long, flowery reports, but you're not going to get meaningful financial contribution from a robotaxi for a long while. So, yeah, I think we're caught between these two waves of growth. Not sure how much near-term upside is there in the stock, but I do like it.
You could start to see, and this is key here, okay? This is very important. Everybody understands this. You could start to see very small amounts of revenue in 25 or 26 in regards to robotaxis, but I'm talking very minuscule because it will be in some probably test markets at the particular time. 27, 28, you could actually start to see something where it actually starts to affect Tesla's numbers in some capacity. And then as you get into 2029, 2030, it's going to become very substantial for Tesla, right? But it's not like, okay, they got a robotaxi in the market and now all of a sudden, you know, Tesla's business is like this insane thing. It's a process. It's going to take years and years to scale, and probably, you know, to get it to full scale where it's, you know, in, I would say, the far majority of major cities throughout the United States and the world, that's going to be like a 10-year process. Like, that's going to be a long process to get it there, right? And just every year it'll be closer and closer to that you know, point in time. But it's a process to go through.
That, you know, others may not do the rigorous analysis. What are you basing this rigorous analysis on? I mean, a lot of other analysts who are pointedly bearish on the stock will say that we've gotten no details on what robotaxi will be or what it might mean for the company. So how do you then plug that into a model which is so fine that you can go from a $600 billion valuation plus to 400 something?
I think the way to approach this, one, do a top-down look, right? You say, do you believe in robotaxis? Yes. Okay. What is the market size for this? It is enormous. Okay. Then you try to be as conservative as possible. Say, what is the minimal amount of market share I think Tesla could get realistically? I give them 20% market share in the U.S.
Market share of what? What is the total addressable?
Of that total addressable market.
Which is everybody in the world who wants to ride a car?
No, it's a robotaxi market where I haircut and I do substitution of private car ownership, only people in cities, housing dynamic. There's a lot of work, yeah. And so you do that math and you come out to a pretty conservative. Actually, the reason why I cut from 600 to 400 billion is because I lowered my pricing assumption with the help of our internet analysts, and I raised the amount that companies like Uber and Lyft are going to get from that relationship because I was underestimating the value from those app providers.
I'm interested in your take on how far ahead of the curve they are on robo-taxis in terms of innovation, because clearly they were ahead of the curve on EVs, but pretty much everyone's caught up with them now, and some Chinese players like BYD can deliver.
Everybody's caught up with them now? What are you talking about? That's just not being very educated on the EV market if you think everybody's caught up to Tesla. That's hilarious.
At a much lower cost.
No, that gentleman, he might be making actually a big mistake with his numbers there and kind of running his projections and whatnot, right? If I heard that correctly, that gentleman said something around expecting Tesla to have 20% market share of the robo-taxi network. If I heard that correctly, right? I think that's a huge mistake. What do I mean by that? Listen, if you look at Uber's market share, it's not 20%. It's something like, oh gosh, what is it, 70% in the United States, something like that, right? Tesla should easily have the leadership position in this particular market, right? And they have the underlying business to really build this out as fast as possible, right? Never mind if they have Travis come over and run this business, and we're at a whole different level, right? But when I look at it overall, I'm like, 20% seems very low for market share of that robo-taxi network. If Tesla really executes the way I think they're going to over this next 5 years, I think they're going to end up with a way bigger market share. I think they'll end up with an Uber-like market share. I think there will be other players in the robo-taxi network, right? But I think there's going to be the big dog, and that will be Tesla over time, right? I do think Uber and Lyft could end up being players of the robo-taxi network long term, right? Maybe Lyft gets bought out by Uber at some point in time, and they, try to get their market share together and, license technology for self-driving vehicles or something like that. I think that's a potential for those companies. And then you're going to have, maybe somebody like a Waymo or something like that, and maybe a startup. But at the end of the day, the big dog, the big market share should end up going to Tesla by far and away in that market, in my personal opinion.
So could the same thing apply on robo-taxis, at least this time, even before it's become widespread and adopted?
Yeah, that's why I did this approach where I looked at the entire ecosystem. There's a lot of players that are going to play in this, right? It's really three parts. It's the car, it's the software, it's the app. There are going to be a lot of OEMs that are going to make the car. There are going to be a lot of companies that will do the software. In terms of them specifically, I do think FSD version 12 was a breakthrough event. I mean, Elon's completely pivoted the company from not only from a headcount perspective, but in terms of pushing out the next-gen facility, now unveiling the robotaxi on August 8th. It is a game changer, and they do have the most miles on the road thanks to Autopilot, the biggest fleet of cars on the road. There are a couple other companies, obviously Mobileye is a good notable one. Obviously GM and Waymo are. So there are going to be a lot of players in the ecosystem. All I'm saying is they will have a big seat at the table. And like I said, 20% market share for their walled garden, I don't think that's unreasonable. And only 7 to 8% in Europe and China. It's because the overall TAM is so big. It's in the trillions of dollars. I'm only saying they're going to get 400 billion of this enormous game-changing market.
You say, the stock has almost erased all of its losses for the year. You said earlier, those who are sending it up perhaps now are not doing the rigorous math you do. But has that ever been the case that they do the rigorous math? And when, if any, does it actually matter?
It doesn't. You're absolutely right. You have to do this second derivative thinking with the stock, right? I think what's important to take away from yesterday is not necessarily the stock price, but it's the fact that people are capitulating on giving up on it, right? People want to be constructive on it. That's a signal to me that people are coming around to the robotaxi argument. I've been coming on CNBC for over a year talking about robotaxis. If you look at the YouTube clips and the comments, it's been, this guy's crazy, his shirt is ugly, 6 months ago. Look at my recent commentary on YouTube. My mom loves it. It's more positive. So I think there is a sentiment shift, getting more constructive on this as a reality, not just me with my tinfoil hat on talking about science fiction. So I think people are getting more realistic. I see that as a translation of the stock move, not really that deliveries mean something significant. Cars is only less than 10% of the value of my price target.
What about robots?
I think two things are helping get people more into the belief that robotaxis are coming, and they're going to be here sooner rather than later. I think one, when you see how much progress Tesla's made in FSD over the past year, it's very immense. And I think that's helped get people to that place of like, whoa, wow, they're actually going to do this. They're actually going to solve this autonomy issue, right? And the second thing is the August 8th announcement, right? Where they're supposed to show off the robotaxi and talk in detail about robotaxi and that opportunity, right? And how they're going to execute there. And so I think from both of those standpoints, I think it's gotten a lot more people to that place of like thinking like, hey, this is a reality. Whereas, certainly a couple years ago, a lot of people were like, that's never going to happen.
I don't value that. It could be something, but I'm looking only at the businesses that they're actually going to do something with, that I believe they can. And there's something we didn't even talk about, megapacks, energy storage.
Right.
There's something that came out yesterday,
yes.
9.4
record deployment.
gigawatt hours.
Yeah.
Last year, the entire globe, 100. They did that 9 in 1 quarter. They were 15% of the market last year. They're gaining market share. This thing is growing by like 80% this year. It's actually worth more than my car business as well. I don't think many people are talking about energy storage either.
Yeah, no, energy always gets put on the back burner. Everybody's always just focused on how many Model 3s do they sell, how many Model Ys do they sell. That energy business is becoming no joke. And that's where you get in this Tesla story, and that's where things get so exciting. Because they got this big energy business that's growing so rapidly, right? You've got the auto business, which we know everything's going EV long term, right? We know that. Additionally, you got the services revenue starting to scale up in a substantial way. And then over this next 5 to 10 years, the robotaxi fleet's going to build out in a substantial way, right? And there's other growth vectors on this company as well. Those are just some of the first ones that kind of come to mind. And so that's what makes, I think, Tesla such an interesting opportunity, and why there's a lot of people out there like myself that are happy to hold this stock, because we believe there's a potential that this could be a several $1 trillion market cap, if not larger than that, because of all these different growth vectors all over this company, right? Alrighty, next one up here. Why Dan Ives says Tesla's undervalued.
Demand softened in China and globally for EVs. Boom came off the rose. They missed deliveries in 1Q. But our whole call is adult in the room, Musk steps up, turns us around, cuts prices. Then the mojo returns. And that's what we saw yesterday. I mean, the 2Q deliveries handily beat Whisper and the Street. And Paul, I believe we're going to a historical period because Robotaxi Day, August 8th, we just raised price target to 300.
Let me push back against Daniel here a bit. I got to push back against him. Listen, it was a very, very minuscule small beat yesterday. I mean, let's not make it sound like it was like, holy smokes, I can't believe Tesla sold that many cars. Like, come on, man, that was very slight beat.
I could argue FSD and autonomous. Tesla is the most undervalued.
FSD is
full self-driving.
Full self-driving.
Tesla is the most undervalued AI play in the market.
Everything you just said is about...
See, I mean, they beat by about 4,000 vehicles. When you're doing 400,000 plus vehicles, 4,000 out of 400,000, last time I checked, that's like 1%. Like, come on. Like Dan, we got to make these things a little more realistic. Like, that wasn't some incredible beat.
If we can all agree Toyota's the machine of the world in automobiles, to be charitable, it's trading at 10 times earnings. How do you buy Tesla? Forget about the disasters of America when the best run machine is running at 10 times earnings.
Yeah, I think Tom brings up like probably the biggest debatable point in Tesla. I've always viewed Tesla as a disruptive tech company. Never viewed them as an auto company. And I think more and more the software piece, especially when it comes to FSD and autonomous, that is ultimately what's really going to distinguish them more and more going forward. The way that you get to evaluation, trillion, half, 2 trillion Tesla, it's not auto. It's that this is essentially an AI play. It's data-driven, and the sum of the parts model starts to play out. That's why I believe this is marks a huge inflection point in the Tesla story. And I think August 8th, look, just like we talked about with Apple going to WWDC with Cook and the AI strategy, this will be a historical moment for the Tesla story.
So what is that event? Explain to us what that event is.
So they're going to basically introduce their autonomous and robotaxi fleet, which essentially is going to lead to, over the coming years, I believe 1 of every 5, 1 of every 6 ride shares at some point.
Which city is going to do what you're talking about? It's not congestion New York.
One by
Look,
one.
I think next 3 to 5 years, autonomous is coming. Because in China, it's coming. FSD and autonomous is happening.
It's going to work in Kansas City.
It will work in Kansas City. I say, but put it this way, by the end of the decade, you will have a percent, 5, 10, 15% of what I'll call shared rides that will not have a driver.
Okay.
So, real problem there, I think his name was Tom, right? He brought up that company named Toyota, right? Here's the problem. And he brings up how, cheap Toyota stock is trading out on PE basis, okay? Here's the issue with Toyota. Where's Toyota at with EVs? We don't know. Toyota's been very standoffish about going down the EV route, right? And that looks like a smart decision in the short term, but it looks like a horrible decision over the long term, right? Because the companies that are trying to invest in EVs are losing a fortune. Toyota's not having to really deal with that, right? But at the end of the day, we know these markets are going EV long term. We know that. And so if they want to keep trying to fight that, you're just fighting against the future. Like they're going to make a huge mistake in that. So we don't even know how Toyota's going to play in EVs. Secondly, how are they going to play in autonomous vehicles? They don't have that technology. And so when we got two massive shifts happening at the same time, right, over to EVs and over to the car drives itself, where's Toyota's at there? We don't know where Toyota's even going to be in 10 years, right? Maybe Toyota's still an auto giant, or they're probably not going to be an auto giant. They're probably going to be going, if we were to fast forward 10 years from now, Toyota's probably going through a whole massive amount of financial issues left and right. And you're going to see a massive consolidation in regards to a lot of these old internal combustion engine type companies because they're going to be disrupted in such a substantial way. And they're not on offense enough right now. A lot of these companies are too focused on paying dividends and doing share buybacks instead of focusing on, we got two massive shifts here and we better get on that. And so that's why no one wants to buy Toyota stock. That's why no one wants to buy that stock. That's why it trades at such low P's, and it will continue to. Jim Liebenthal expects a Fed September cut. Okay, do I?
Joe Terranova, Steve Weiss, Jim Liebenthal. We do check the markets have extended those record highs, certainly for the S&P 500 and the NASDAQ 100 as well. So S&P and the NAS are still in the green, but you see the Dow down about 0.25%. Joe, interesting day thus far. Services sub 50. New orders were weaker. Yields have been creeping up of late. They are down. And then I guess no surprise in that little mix that tech is the thing that is leading yet again.
I keep emphasizing, to me, this is the story. This is the story going into the second half of the year. We think about the Mag 7 coming into 2024, and we had this moment where we said, no, it's either the Super 6 or it's the Fab 5. Well, guess what? Here we are back talking about the Mag 7 once again. You've had this remarkable technical breakout in Amazon, which is carrying forward. And now, how about Tesla? Tesla, since June 24th, it's up 32%.
It's up 6 days in a row. This would be 7. Today. It's up 30% back to June 25th, to your point.
Right. So you tell me, as you look forward into the second half of the year, I see a consumer that's weakening. Okay. I see the risk surrounding now we're beginning to price in the presidential election and the fact that that is impacting the long end of the curve in the Treasury market. I'm putting all that together and saying to myself, do I really want to move away from quality? Do I really want to move away from these Mag 7? I'm not so sure I have the evidence to suggest doing so again. And that's being said by someone who's equally weighted in their strategy.
Weiss, Apple, Microsoft, Amazon, all to Joe's point. New highs again today. You got some lofty targets still for the S&P for the remainder of this year. 6,000 is at the peak. And maybe it's tech that's going to get you there. If we can reach those heights, that it's going to be that trade that has worked and will continue to work. You got the highest target on the street, 6K by Evercore ISI.
Yeah, look, 10%, not even 10%, is sort of what you need to get to that 6,000 target. 10% in the back half of the year isn't unreasonable on the present fact pattern that we have. But there could be some complications. And one of those complications will be, as we saw immediately after the debate, that Trump's agenda, as he speaks about, forget about what he may or may not do, but as he speaks about it, is largely inflationary. So what you will have is you'll have a higher 10-year That's going to reverse what we're seeing today, the weakness from the economy. And there's this push and pull. Is the data that's coming in going to drive the Fed, right, to lower points? And will they be able to sustain that? They're not going to base their monetary policy based upon who may get elected. They base it on what the data is at the time. But the bond market is telling you it will be inflationary. So the point of that is you sort of have to rethink what you've done to broaden out your portfolio and go back to Joe's point and stick to those companies that are least impacted by a higher rate.
Now, maybe it's even trying to game out the prospect of, yes, what some would suggest is a more inflationary agenda. What also they would suggest in the same breath is a more growth stimulating agenda too. So if you're looking at the potential of a strong economy, you're going to get rates potentially moving up in tandem with the idea that it's inflationary too.
There will be stronger pockets. Look, every sector doesn't trade in one direction usually. Maybe in a day like today it does, but over any period of time it doesn't. So what will be impacted is that we're seeing interest rates, again, to Joe's point, finally impact the consumer, finally impact auto sales, impacting home sales. So there's a large segment of the economy that higher rates is going to continue to hurt, not help.
Well, that's even the gentleman sitting to your left, Weiss, has expressed his concerns of late about the state of the economy currently. You get it backed up, his concerns backed up by the data. Services, as I said, sub 50, right? Service has been the strong point. It's been the manufacturing squirrely numbers we've been getting for the better part of a couple of years. New orders weaker, as I said.
Yeah. I mean, look, I've been optimistic for quite some time. However, it is hard to maintain the optimism in light of the data that's coming in, like the ISM services. I mean, weekly jobless claims, yes, they've popped up. They're not at a critical level yet, but they certainly have moved higher. I want to be clear to everybody who's watching. I'm not selling stocks. I'm fully invested and I am positioned for the broadening. But what I need to be clear about is that thesis relies on rate cuts starting in September at 25 basis points and alternating 25 basis points thereafter. I know, at every other meeting thereafter. I think the Fed, the danger here, and it is significant, is they think that since they've gotten away with this for so long, that the economy has grown, the labor market has maintained strength for so long with a very restrictive, the Fed funds rate, 5.5%, the PCE is 2.5%. That's 300 basis points. That's restrictive, okay? Yeah. They're not going to get away with it forever. And, right now it looks like good odds, like September is going to be the first rate cut. Yeah. If that hangs in there, and if they do every other meeting from there, I think we can skate by. But I'm getting nervous, man.
Interesting. Do I feel like they're going to do a September cut? I'm actually not feeling that optimistic about a September cut, to be honest. I think we might have to push toward November or no cut, right? And the reason being, you heard Powell talk yesterday. You know what JP was saying? He was talking about it's going to take years to get back to 2%. I'm like, whoa. I was not expecting him to go that hawkish. Holy smokes, that was no jokers. And so, just hearing him say that, I was very surprised to hear him say that. I'll just be completely honest. So, I don't know. September cut, I think that's 2 months from now. Is the Fed ready to cut in 2 months? I don't think so, because my thought process has always been the Fed wants to see 2 to 3 months of a CPI in the twos. Doesn't mean it's at 2, it's just in the twos before they feel comfortable enough to go ahead and start cutting. That's kind of always been my thought process. So do they start cutting when we're still in the threes? I don't know, right? Or let's say we hit 1 month of like a 2.9. Do then they cut? I think that's tough. So I don't know. Like if they're cutting this year, I think it might get pushed out a little bit more into fall time. Fed modest about further progress toward 2% inflation.
Further progress toward 2% inflation in June. They emphasize it would not be appropriate to lower the target rate until they had greater confidence that inflation was moving toward 2%. Some of that is what we saw in the statement. It's what we've heard from Chair Powell. Most see the policy rate as restrictive, but there was some debate and some uncertainty over just how restrictive rates are. Fed also said employment and inflation goals are now in better balance, leaving monetary policy, quote, well positioned to deal with risks and uncertainties. They said they're prepared to adjust policy if risks emerge or in response to unexpected economic weakness. When we look at the outlook a little bit on the inflation outlook, several participants said if inflation persists or rises, the Fed may need to raise rates further. The Fed also observed longer-term inflation expectations remaining well anchored, so they say that underpinned disinflation. They think that's still moving forward. On economic growth in the outlook, a majority viewed economic growth as gradually cooling. Many participants saw the rise in credit card use and delinquency rates as a, quote, significant concern. A few saw fragility in commercial.
Okay, that's important there. If you want to even consider a September cut, that is important there. The fact that they think delinquencies on credit cards is significant, right?
Credit card use and delinquency rates as a, quote, significant concern.
Significant concern. That's key. That's one of those things, if you want to think about a September cut, only 2 months from now, that's one of those things that you got to freak the Fed out to make them make a cut like that, right?
You saw fragility in commercial real estate as a downside risk to economic activity. On the labor market, some interesting debate here. The Fed saw reduced tightness in the labor market. They listed decline in job openings, a lower quits rate, reduced hiring, and slower wage growth. Several participants emphasized that further weakening in the labor market could actually lead to higher unemployment, and they say that that's in contrast to in the past when we've just seen reduced job openings over the past couple of years. Some participants said the labor market would need careful monitoring now that the dual mandate is back in better balance. But participants generally believed that further gradual labor market cooling may be required before they have that confidence to cut rates. John, back over to you.
Interesting. So did that sound to me like the Fed's ready to cut now? At the same time, I do think significant concern was very interesting. So the moral of the story is if we see credit card delinquencies continue to go up quite considerably, I think over this next quarter, I think the Fed's going to start cutting, being that that's already on their radar as a significant concern. That's key word there. So they would give up the fight on inflation if they really felt like things were going to go south here. Okay, now let's talk about real estate, because I think this is a really important subject, actually, on kind of this whole, you read articles like this. This is just back from the end of April, right? Luxury real estate prices just hit an all-time high. It makes it sound like things are great, but are they really great?
As prices drop and inventory is on the rise, Robert Frank's got all the details. Hey, Robert.
Melissa, Manhattan real estate sales stalled for 2 years as buyers and sellers just remained too far apart on price. Now the sellers are caving and deals are rising. There were 2,600 sales in the second quarter in Manhattan. That's a 12% jump over last year and the first increase in 2 years. Rising inventory and falling prices, they are the big drivers. The average apartment price in Manhattan fell 3% in the second quarter. It will now cost you only $2 million to buy an apartment in Manhattan. Listings are piled up and sitting on the market longer. There are 8,000 apartments for sale. So at the current rate, it would take about 10 months to sell all of those apartments listed. Brokers say anything over 6 months signals a buyer's market. So we're in a buyer's market right now. Brokers say they expect the rest of the year to be stronger, especially if rates fall and mortgage rates are not as much of a factor in Manhattan. 62% of the deals in Manhattan were all cash in the quarter. That is near an all-time record. We're going to see what rents do later next week.
It's very important everybody understands the advantage a market like Manhattan has, that does not an advantage other markets have. Like, that's a very freakish market where people just have silly amounts of money. So 62% buying cash, yeah, you're not going to see that at other places.
We're going to see what they did in June, and that's one of the reasons people are moving out of the very high expensive rental market into the sales market, because the average rent in Manhattan has been sitting at $5,000 a month for at least 6 months, guys.
It seems like, Robert, finally there's just a realization that rates are going to remain where they are for a long amount of time, because if you're in the renter side of the market, you're not in that all cash sort of, market where you can go at any time whenever you feel like it.
That's absolutely true. I think a lot of the buyers just said, look, we're not going to get that magic, drop to 5% or so in mortgages anytime soon. And we're sick of paying $5,000 a month in rent. We might as well bite the bullet. So there's sort of give on both sides. And there had been, this standoff between buyers and sellers for 2 years. Now they're coming closer together, and we'll see whether those deals continue in the second half.
Obviously, Robert, New York is pretty much as prime a market as it comes. Is in the other prime markets around the U.S., is there a similar picture, or is New York unique in terms of suddenly seeing this become a buyer's market?
New York is a bit unique, although when it comes to inventory, we are seeing certainly a lot of inventory in South Florida. Miami, you've had a large number of new condos come on the market, so they're getting more supply. You could see falling prices there. And in LA, you're seeing more supply because of the mansion tax and other things, less demand. So across the board, especially in high-end markets, you are seeing a lot more inventory come on the market, and that could bring down prices across the board.
Interesting. You know, it's so silly. I see, articles like this, luxury real estate prices just hit an all-time high. It makes it sound like luxury real estate's been great. Luxury real estate's been bad for at least a year or two now at this point in time, like bad. You go look at somebody like RH's numbers, they're bad. They'll tell you about the luxury real estate market. If the luxury real estate market's booming, RH's numbers are doing phenomenal because then all these people that are buying this luxury real estate are all buying luxury furniture as well, okay? Here's the problem. They say the median price of luxury homes hit an all-time record of $1.2 million. Okay, listen. I'll tell you, in just about every major city in the United States of America, you cannot get luxury real estate for $1.2 million. Here in Vegas, $1.2 million is not getting you luxury real estate. It's getting you an upper middle class home. That's all it's getting you. You want to come to Summerlin and you got a $1.2 million budget, you're not getting a luxury home in Summerlin for $1.2 million, or Henderson for that matter. You better come with 2.5 mil or more if you want an actual luxury home. 2.5 or more. So, maybe 10 years ago, 15 years ago, you could say, okay, anything over $1 million's luxury. Not anymore. Go to LA. Go see what you can buy for $1.2 million in LA. Go to San Francisco. Go to New York City and see what you can get for $1.2 million. Go to Miami and see what you can get for $1.2 million. Go to just about any major city. Go to Denver, Colorado. See what you can get for $1.2 million. Go to Salt Lake City. See what you can get for $1.2 million. Just about any major city in the United States of America, $1.2 million is not getting you luxury real estate. It's getting you an upper middle class home. And that's it, okay? It's not like if you're rich, $1.2 million house is not going to excite you. I can promise you that. And so, I think sometimes people they think, oh, this used to be luxury, so now that this luxury, we can look at the auto market, right? It used to be a luxury car was anything above $50,000, right? Is a $50,000 car a luxury car nowadays? No, of course not. Like now, that's just like an average vehicle, $50,000, right? Now you got to push well. Even you go to up to $100,000. There's so many vehicles out there that are $100,000 nowadays, brand new, that are not luxury vehicles. It's incredible, right? Heck, a Chevy Tahoe that's a little specced out is $100,000. Is that like a luxury vehicle? Of course not, right? Like you could go through that. And so, the old prices that this thing used to be luxury, you can't consider that now. And the fact that a lot of these publications and media still thinks like this old price point is like for luxury, and no. That's not the way it works, especially with how much inflation we've had, not just over the past 3 years, but really since the GFC. Come on, man. Okay, guys, appreciate you joining me as always. Thanks so much for being here. Last chance to get in for the wait list for 1000xstocks.com. That sale starts at midnight. So, starting very, very soon here. So last chance to get in, pin comment down there, enter your name, email. We'll send over the deal as soon as it drops. It's a one-day sale. Much love and have a great day.